Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thanks again for tuning in this week. We've had, 2 months of price increases now in February and March, bidding wars, and a whole bunch of other things happening. But I just want to tell you about my market. So in my market in the region, population 500,000 or so, what I'm seeing is if your house isn't priced right, it's not going to sell. It's going to sit on the market. Yeah, I'm sure there's some bidding wars. They're probably not like Toronto with 17 offers and whatnot. But again, we'll get into the Toronto numbers in a little bit. I'm going to go across the stats this week. But yeah, unless you price your house right, it's not going to sell. Anyway, let's get into the statistics from across Canada. I have all of them except for the East Coast because they haven't released theirs yet. First off, let's look at the number of sales year over year from March 2023 to last March 2022. And the biggest drop in sales year over year was Peterborough and the Kawarthas, and they had, I think it was 54% decline in sales over last year. So, as I like to think about it, the realtors there have taken a 54% pay cut. Next, you have Edmonton sales are down over 40%, well over 40%, closer to 45. Greater Vancouver, again, they're down over 40%. They've seen some good month over month price increases, but you can see the number of sales are down. Woodstock, Calgary's down 40%. Ottawa's down 40% year over year. Kitchener-Waterloo comes next. Fraser Valley, Lakelands, which is Muskoka area, and Bracebridge in Ontario. Durham region, Cambridge, and the list goes on. Greater Toronto, they are down just under 40%. They're about 37% or so. Hamilton, Burlington, they're down 36, 37%. Niagara, Oakville, London, Guelph, Brantford, Barrie, they're all in the 30 to 35% declines from the previous year. And even as you get into Montreal and the province of Quebec, they're down 25 to 30%. And the best performing market with year over year sales so far is Regina in Saskatchewan. Good job, Regina. So moving on to new listings now. So this chart compares March 2023 compared with last March. And you can see the listings are down, or new listings are down over 40%. They're almost 50% in Cambridge, Durham region, Oakville, Greater Toronto, Fraser Valley, Kitchener-Waterloo, Calgary, Hamilton, Burlington, and so on. Greater Vancouver actually is just under that 40%. They're maybe about 35, 36%. And as you can see, most places in Canada have reduced new listings compared with last year, except for some places. And most of these are the smaller areas or smaller populated areas. Southern Georgian Bay, Simcoe and District, Chatham-Kent, Northumberland Hills, and Lakelands. So just the small outlying areas have increased listings from last year. And that could be a weather thing because they have, ice in and ice out. They're in cottage country, a lot of these places. Moving on to month over month average price change. So how did March this year compare to February this year? Some places did have negative price growth month over month, which is surprising considering we hear a lot of talk about multiple offers and the market going crazy. And those include Woodstock, Ingersoll, which were about 3.3%, Southern Georgian Bay, 3%, Grey Bruce, Kingston and area, Guelph, Victoria, Cambridge, which was a pretty hot market. They've actually have negative price growth around 1% month over month. Regina and some other smaller areas. Ottawa region is flat. Hamilton, Burlington, I've got a lot of comments, talking about Hamilton, Burlington, and prices are going crazy and multiple offers everywhere. They've only had a 1% month over month price growth in March. Another one that surprised me was Toronto. Toronto's only at, it's not even 2%, Greater Toronto area. And again, one of the areas I've heard nothing but, 17 offers on this house and multiple offers everywhere, buyers lining up at open houses. But it's not shown in the statistics here. As we move down the list, we have Oakville, Brantford, Interior BC, Okanagan Valley, Montreal, Fraser Valley. And it looks like most places have had that, 3 or 2 to 5% price growth month over month in March. Not big of gains as they had in February, but it seems like that price growth is slowing down at this point. So Edmonton and Calgary are still seeing good price growth. They're over 5% for both of them. And the rest of the areas are smaller outlying areas. Windsor, it's not that small of an area, but it is an outlying area. Saskatoon, Lakelands again, Cottage Country, and North Bay. They've had some pretty big price growth, but again, they're very small data sets in those areas. And moving on to taking a look at the percent decline from the peak, which I usually touch on every month. There is still no area in Canada that is not in the negative from the peak. Usually, most peaks were in February to March or April last year. And you can see the smallest losses is Saskatoon. Good job again there, Saskatoon. Very steady market, I guess, in Saskatoon. Little to gain, little to lose. And that's actually normal price movement for places. They go up 1, 2, 3% a year and down and whatnot. So that is normal. The rest of these places are not normal. And again, from the bottom there, Calgary has fared the best. Greater Vancouver, I don't know what's with you guys. You guys are all nuts there. You love your real estate. I guess nothing can stop Vancouver for some reason, but we'll see if a recession comes, if that stops them. But as for now, they've remained very resilient. And same with Quebec and Montreal. Many of the outlying areas have fared okay. Then as we start moving into the rest of the country, we're, going up from 15% up to 25, 27% in certain areas. But starting at, down near the bottom again, it's Regina, Victoria, BC, Greater Toronto. They're still, sub 20. They're at about 17% or so right now. Oakville and Milton, they're almost 20% from the peak. Same with Kingston. As you approach Hamilton, Burlington, Kitchener, Waterloo, they're all getting into the 20% plus. London, St. Thomas, Guelph, Brantford, Barrie, Durham region, Fraser Valley, Cambridge, Woodstock, Ingersoll, and Northumberland Hills takes the prize for the biggest declines from the peak. Smaller area, but they still had the biggest declines there. And lastly, we have the dollar declines from the peak. Biggest losses, Fraser Valley, then Durham region, Cambridge, Southern Georgian Bay, Oakville, Greater Toronto. Greater Toronto's up there with dollar declines. So percent losses are not as great, but when you look at the dollar figures, it's a whole lot of money. Northumberland Hills, they seem to be up there in a lot of these charts. Guelph, Berrien District, Lakelands, Woodstock, Ingersoll, Brantford, Kitchener-Waterloo, Hamilton, Burlington, Peterborough, Owen Sound, Grey Bruce, London, Niagara region, Simcoe and District, Windsor, Essex, Ottawa. A lot of people ask about Ottawa. They're down about 150 grand or so. Kingston area, Bancrofton area, Interior BC, Okanagan Valley, Greater Vancouver. Not a whole lot of losses considering their price points. Montreal, North Bay, Regina, province of Quebec. Montreal and Quebec, the province, it seems like they have fared one of the best considering their price points, because they're not as low as many of the places in, say, Saskatchewan or Regina or Winnipeg, but they've been very consistent, and it seems like a very stable market there compared with, you get Toronto and Vancouver and whatnot. And the smallest losses, not surprising, Edmonton, Calgary, and Saskatoon. So it's pretty interesting looking at this data, which places are doing better than others. Obviously, Ontario is the most volatile or has the biggest losses in most, or if not all, categories, especially those outlying areas. They've lost percentage and dollar value from their peaks. And again, they had the biggest run up, so it makes sense. So now I just wanted to take a look at like asset prices compared to real estate prices and just kind of, compare them and side by side and look at them. So here is the chart from the national average house price. That is the red line. The blue line is the HPI. So looking at the red line, you can see in early 2020, it took a dip. That was obviously the start of the pandemic. And what did we have? We had low interest rates, or promises of continuing low interest rates, and easy money or money printing, and prices took off, right? And this isn't just real estate. So I want to just kind of put this in perspective with other assets and markets and whatnot. So as I go through, I'm going to leave that real estate price chart up, and I'm just going to drop in some other ones beside it. So here is the S&P 500. And of course, you had the big run up in early 2020, just after that dip for the start of the pandemic. And it looks pretty similar to the real estate chart there. And of course, what happened in 2022, rate hikes started coming. Just the talk of the rate hikes, by the way. This is only like the one little rate hike in the beginning. And of course, everything dropped. How about the Dow Jones? Same pattern. 2020 goes up. 2022, it goes down when the interest rates go up. Toronto Stock Exchange, same thing. Even Bitcoin, it only took a little dip in 2020, but it still took a dip in April or March, whenever it was. And of course, it went up. Interest rates start to go up and it falls off a cliff. How about Tesla? Same thing. Tiny little dip there in 2020 and goes up to the moon. Now look at it, comes right back down. So I guess my point is it's pretty safe to say that real estate's not unique to this asset bubble, right? This is an everything bubble and caused by cheap money and low interest rates. And as soon as interest rates started to rise, everything dropped. So it is a speculative asset everything bubble or speculative everything bubble. So after all that, we're left with inflated asset prices, high interest rates, job numbers that don't seem to be coming down. But actually, let's take a quick look at those. The latest jobs numbers from Canada, we added 34,700 new jobs in March. Now, if you look at these numbers and you just do a quick calculation on it, we gained 1 million people last year in 2022, mostly through immigration. I think that was all, just the 1 million was through immigration. But regardless, we gained 1 million people. If you divide that by 12, that's 83,333 per month. Divide that by 2.4 people per household, and look what you get, 34,722. So we actually had zero net new jobs when you take into account population growth. So when you hear, jobs numbers and the labor market still booming, I don't know. I don't think they take this into account. They just spit numbers out that we had so many new jobs. Also, if the job market's so great adding all these jobs, why did the Liberal government have to add in another 40 billion of deficit spending or potential deficit spending in their budget this year? Makes you wonder, right? I want to point you to this article. The link's in the description. This is from Reuters. It's from February 24th. Fed needs a recession to win inflation fight, study shows. So this is out of the States, but it is relevant to Canada and mentions Canada in it. So let's take a quick read of some key points. The Federal Reserve will be hard-pressed to lower inflation without a significant blow to U.S. economic activity and a sharp rise in unemployment, and even then may miss its 2% inflation target for years to come, a group of top economists concluded after a review of central banks' past inflation battles. The authors found that over 16 episodes of disinflation engineered by central banks in the United States, Germany, Canada, and the United Kingdom, we find no instance in which a significant central bank-induced disinflation occurred without a recession. So right now, we are in that disinflation period where central banks are tackling inflation and trying to lower it. So here's some questions to ask yourself. What happens to real estate and asset prices when a recession comes? Where will interest rates be a year from now and why? Where will house prices be a year from now? So let me know your answers to those questions in the comments. And until then, I'm going to keep bringing you the data. Thanks for watching, and I'll see you next week.